Valley Bank, it's called SVB, like made moves that were terrible based on, the Fed's decision to raise rates, and they were buying bonds that, were not going to be good.
I'm going to explain it in more
Yeah,
detail because I was waiting for it. But what really happened was that since there's many people trying to explain it and also decide like what decisions caused the problems or what SVB did wrong and if they were being like greedy, they had a ton of inflow in deposits by people banking with them. So people pushed their money into the banks. And what they did is they thought that inflation was going to be tamped down based off of markers from Joe Biden. Now, the tricky thing is, these guys are all California, Silicon Valley tech bros who are all aligned with the government.
hence the name Silicon Valley Bank.
They're very blue, they're very on the Democrat side. When they crashed, people expected the bailout, but like this story is a couple days old, so the bailout has happened.
Yeah, it's about to happen.
It's
So
it's already been it's already been confirmed, so they're going to stabilize the markets. What they're saying is that it won't be taxpayer funds. What might happen is that other banks will swallow up SVB, and the issue is that what they did is a very bad problem where their liquidity was way too low for the amount of deposits that they had because they did not expect people to all retract their deposits at once.
yeah, there's a bunch of like reflexivity, like a bunch of like kind of the market fear and ongoing just kind of chain reaction like you've seen with FTX. Like as immediately there's some, whiff of, FUD or like
So if there's smoke, is there fire?
yeah.
And then there might be some fire. And then this is the question where really like I said, there's the two sides. With the bond market, now the government is cranking up rates and they want people to deposit. And so now they're offering very high percentages. So if you do get a CD, which is a certificate of deposit, and you do it for a year, you can get up to 6%, which is like that used to be unheard of, but that's because we're doing with inflation. So it's like inflation now this is scary because if you are a student of either math or science or like I mean the science of economics, 6% traditionally in the United States is a good return on your investments. Although it's been a giant bull market historically for anybody who's invested in the S&P or real estate. Everything is blown up. And so now people are saying that it might be a bubble. The reason that SVB went under is because they put all of their funds that they got deposited into 1% interest rate yielding bonds that didn't mature right away. And they have a ton of money invested in low yield bonds that is stuck with the Federal Reserve. So they have these assets, but they're just not liquid. But their liquidity compared to their liabilities, they have like, imagine $100, and then in their bank account, they have $1. If people want $20 out of the $100 that has been given to this bank, the
They
bank doesn't
can't,
have
yeah.
$20. It's ridiculous.
So
They all
everyone
have very, very low, and what it's called is reserve requirements. They're at or below 1%. And then the thing is, if you've seen like what was the movie, Margin Call?
oh yeah.
Okay, yeah, we're right at the reserve rates, but like if we have a bad day, we're illiquid.
Yeah.
But now it was the Silicon Valley people talking to each other, and then they all pulled out at the same time. The CEO the day before sold,
3.2 million shares.
yes,
Some shit like
an
that.
incredible amount of stocks the day before. They knew that there was going to be a cash crunch. They knew that there was liquidity issues. And so now it already appears that other banks are going to buy it out. So it won't be,
FDIC already took over.
no, it won't be, no, I don't believe that it's going to be FDIC. I think it's going to be private.
No, it's
No,
closed.
no, 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 no.
Closed.
The FDIC is going to take care of some of the liabilities, But I think that actually people like Berkshire Hathaway are purchasing the debt. So this business has
Under the
assets.
permission of the US government, though.
Well, they've done a fundraising and they've done a sale. So there's many ways to
Well,
cut
and
this.
they also created just recently like a buy or some kind of program about the funds, and then they also announced that people over 250K will get their money back.
Well, FDIC, what they said is that normally they're going to be covered to a certain extent beyond 250K, but then also there are assets behind these things that are going to be sold off at a discount. And so now the vultures are coming
Yeah.
in. So the thing is, FDIC is going to insure some of the deposits, but a lot of the other deposits are going to be, imagine I take out a mortgage for 500,000 or 100,000, but I have like 10,000 in the bank. And then the bank is like, okay, I have 10,000, but like you owe me 100,000, but the guy that I owe 1 million to is knocking on my door. Look, I still am going to pay out my mortgage over 30 years, but the bank doesn't have 1 million to pay out the other guy.
Yeah.
So the whole thing is they have all these assets that over time are supposed to pay off. But when everybody knocks on their doors, they're fucked. But they're going to sell off my mortgage that's 100,000 or 500,000 at 80%. And there's going to be other banks that are going to backstop this bank.